Should I be invested in precious metals? That's a question I've asked myself many times over the last 12 months as I've watched the price of gold and silver skyrocket. And with the recent downturn in the last week, I now question if I missed the bus. This is a topic we discuss today with our guest, Ritchie. He's the former president of SilverCrest Metals, a business which he helped grow from $5 million to a $2.5 billion exit in 2024. We discuss what are the fundamentals of this market and the differences between gold, silver, and copper. He shares his view of why investing in a mining operating company is dramatically more risky than investing in precious metals themselves. He shares his view on what is the best way to invest in precious metals. And if you stick around to the end, I asked Chris what he believes this recent market correction means for the outlook of precious metals. All right, this is Beyond the Family Business Podcast. Please like and subscribe. Let's jump into it. Who are you? Where are you from? And what do you do?
My name is Ritchie. I grew up in London, Ontario, bounced around the world a little bit. I went to school in the States to play tennis. I lived in New Zealand for a little while, lived in New York for a little while with work, and then bounced back to Toronto now in time for a family. What do I do? I just finished up about an 8-year stint at a mining company called SilverCrest Mining. Sort of went all the way from sort of soup to nuts, from a $5 million exploration company to full production construction during COVID, which was a wild ride, and then sold it, in a pretty interesting time. So yeah, right now I just had the first baby. I decided to retire, turn 50 years old and have a kid. So that's maybe not the normal order of things, but yeah, enjoying that right now.
Good for you. What was the size of that transaction for the exit?
Oh, I think it was probably in the neighborhood of $2.5–3 billion. And then the SilverCrest shareholders took paper of Core, the company that bought us. And that thing's probably the equivalent of about $4 billion today. So a pretty wild ride.
Yeah.
So it's like a lot of perspectives, a lot of things learned during that.
You've created a lot of value for people.
Made a lot of friends. I can cash in on some free beers all over the world, I think.
Yeah, no kidding. Which is why you are a perfect guest for this podcast today. Really, my goal with this podcast was trying to find an expert on precious metals and, understanding the difference between sort of the gold and silver market and the mining market, which, as you explained to me, are two distinct things. But before I jump into that, I guess I wanted to just quickly ask a question of, what were the top 2 or 3 things you did in that, relatively short tenure as the leader of that business to take it from a very small business to a massive exit? How did you create that value?
Yeah, so my role was president. We had a CEO. His role was he's a great explorationist, and the data would tell you only 1 out of 750 projects ends up turning into a mine. So I would give him a lot of kudos for discovering that mine, and so I would say a great exploration story, but a lot of luck as it relates to the exploration side of the story. But then you go through phases. So I think another thing that was critically important, we had another key part of the team was named Pierre Baudouin, who built the mine. And you can screw up a million different ways in building a mine, and you can have massive capital overruns that cause financial distress, hurt your share price, having to dilute like crazy at low points. So executing well. And I would say the last really big thing we did well was we exited well, right? Because it's so hard to find a project that turns into a mine, let alone a high quality project. To think you can do it over and over again and recycle your shareholders' money successfully or positively, I think that's the usual trick. People do it over and over again, and once in a while you're going to stub your toe, and it ends up being a really big stub toe. So yeah, I think a high quality project executed well on a lot of fronts, and then exited well. It's a lot of things fell into place.
Yeah, it's an amazing story. Okay, so on to the subject at hand. First of all, and I appreciate this is a very basic question, but can you explain what what is the precious metals market? What does that cover as far as different types of materials?
Yeah, so I mean, there's a couple different ways to place that, but I mean, silver, gold, platinum, palladium, um, they're all sort of in the same family, but I would sort of say, depending on the person you're talking to, it's what needs are trying to be met by which one you would choose to invest in. For example, central banks around the world, they're holding gold, right? Very few, if any, contemplate silver. I mean, I've heard rumblings that some of them are starting, but they own gold. They're not necessarily holding platinum, palladium, copper, and the things like that, right? So some represent a debasement thesis, right? And will trade on that debasement thesis. But again, the functionality of a lot of these materials change. Some of them can be consumed, right? But silver has about 50% of the supply is consumed industrially. It's one of the best conductors out there. So it can move with industrial demand. I would argue copper could probably, not quite precious, but it certainly moves with the debasement theory. And it's certainly a hard asset. Then platinum, palladium, they're all in that same family. I don't believe any central banks and the like are storing those. But if you're in that group of precious metals, there's a kind of a whole family of them, and most of that quantity or aspects of them are they don't deteriorate with time, right? They don't
Right.
break down. They can withstand that period of time. There's scarce supply. That supply cannot be brought onto the market really easily, whereas fiat money, it's infinite supply growth at the press of a button, right? So to me, it's just that broad family, with gold being the leader.
Okay. And what did you focus on your time at SilverCrest?
Well, with most mines, you try to you poke holes in the ground, figure out what you have. And then in some cases, you end up having several metals. You might have some copper, some gold, some lead, zinc, silver. And then you have to dig that metal up and you process it. And then you're selling each of those various components, right? So it's the overall cost per shovel. And then what is the economics per shovel? So at SilverCrest, we were roughly 50-50 gold and silver, right? Silver mines on a pure basis are really scarce, hard to find. About 70% of silver is a byproduct of other metals. Most copper mines in the world, gold mines in the world have some silver. So it's kind of the redheaded stepchild for most of the time. And then you get these wacky moments like now where it's the scarcity of silver itself. People have some fun. But we were gold and silver primarily.
Okay, got it. So that's a good segue into the rest of this discussion, which, from my perspective, selfishly, as a member of a family office, I'm looking at the market and I've been observing it, for the last year, looking at precious metals, thinking, should I get in more than I am, et cetera. And it's so hard to understand as a bystander who doesn't really have any experience in this market, frankly. And then the correction we've had in the last couple of days scares the crap out of me too. But I think maybe where to start it off, which was a very interesting point you brought up early in our discussion that we had offline, was the difference between investing in a mining business and investing in precious metal itself. Can you start off there and sort of explain, maybe the misconception a lot of people have in blending those two together?
Yeah, I mean, in the stock market itself, what you tend to invest in are vehicles or instruments expressing a view of something, right? And as long as something has a high correlation with the view you're trying to take, then that particular instrument is relevant. So with a mining company, like I said earlier, about 1 in 750 projects ends up being a mine, right? You're spending roughly 16 years from day one to production. It takes 29 years to bring a copper mine online in the United States. You're spending that 15 to 20 years all without earning one penny of revenue. It's all money going out the door. So if you're betting on a mine, you're betting on the ability of the company to raise capital effectively, to find a project that has legs to it. to build that mine, within the promises you've represented to the market. And then hopefully you get really, really lucky that at the time you're ready to sell your product, the prices are good. So I would say and mining companies are, gold and silver on steroids, right? They're levered instruments to that underlying commodity you're trying to play. But gold and silver could be going to the moon. And if you end up not having good drill holes, or you screw up your execution, you can't raise money, right? You've lost credibility in the market, you're not relevant, you're not going up, right? So I think it's I call it process over product, right?
Uh,
And that's a big difference. Mining business is extremely risky, but you get these beautiful moments in time where, if gold's up 20%, some of these companies are up 100. So,
yeah.
I think it's a little bit more, it's definitely more speculative relative to the metal itself. So I would argue, for everyone I talk to about gold and why it's relevant, what's the right price, I try to back it up and use the example of, well, let's start with the dollar, right? All dollars, all paper currencies. If you were to look at the US dollar as a company, and you said, all right, well, each year they're going to dilute your shareholders by about 8 or 10% per year. And at the same time, they're starting to run into a problem where their revenues can't cover their debt. And you're heading into a bit of a debt spiral where that dilution each year is actually accelerating. How healthy a company is that? And at the same time, everybody owns it, right? And that's kind of my issue. It's less so about if gold or gold miners are the best way to put your money. I want to start usually the conversation with people to say that paper currencies are a risk, right? And there's a lot of complacency around holding cash. And I think it's only recently people are starting to sort of wake up to suggest, yeah, there actually is a risk to holding paper currency. So I call it compounding in reverse, right? We've all sort of know our basics on compounding, but you're losing 8 to 10% a year when you hold on to dollars, right? So I would say that premise is a little less understood. And the same thing with the housing market. Your housing market's the best place to put your money. You could also argue that what you've done when you buy a house with a 20% down payment is you've taken today's purchasing power and you've got 5 times that, right? So you've used that purchasing power of the dollar 5x, and that house has gone up, or has the dollar gone down, right? And there's all kinds of math to show that, gold's actually outpaced housing prices. So it's less so about the house going up, it's the dollar going down. So I would start that premise that whether you're buying gold, silver, or any other instrument that reflects a store of value, that it should be having a better understanding that the dollar itself is a risky instrument.
Yeah. No, very fair. And then, I think there was a lot of people that got complacent with large amounts of cash when inflation was low. And then the last couple of years, it certainly for us, it suddenly became a key discussion point whenever we were doing asset allocation reviews that, okay, we now have this new, very real threshold that we need to be beating just to stay level, which is, whatever the expected inflation rate is. So I completely agree. I guess I would just to play that back to you to make sure I got it. So on the mining side, because it's an operating business with all of these complexities around needing to raise money, needing to have the right drill holes, et cetera, or results from drill holes, if it goes well, you get a multiplier above and beyond whatever the actual underlying precious metal commodity price is. But to that same point, if they're super highly leveraged and things go badly, then obviously that equity value can get erased in a nanosecond. So it's kind of, it's a much riskier path. And because of all the different variables, maybe somewhat uncorrelated with what's happening in the precious metals market. Whereas precious metals, especially gold, it's really a hard asset, a fungible asset that is, to your point, providing a better return than sitting on cash, and in some cases better than other assets like houses and things that are maybe not as liquid.
Yeah, I'll give you sort of the two streams on that. So, if you were to buy a government bond, say you're getting 4.5%, if inflation's running, let's say it's a 10-year bond, if inflation's running more than 4.5%, at the end of 10 years, you've lost ground. And all the numbers would show that the way we calculate CPI, isn't really accurate as it relates. I think there's a real man index or something like called the real man index, where it actually says like the cost of living, not this artificial basket that gets created. I don't think
Sure.
people care what their six flat screen TV costs in the CPI basket. So I think we're waking up to that and we're losing ground, and people are now saying, holding bonds are a risk. And I mean, that is a pivotal shift in how people allocate capital. So I think that's it.
Mm,
But to give an example for SilverCrest, we were probably in the bottom decile in terms of the cost curve. And when we finished construction, silver was at $18 an ounce and gold was at $1,800 an ounce. We actually were strong enough to have the financial choice to say, the selling price is below the cost. To your point on leverage, and most other companies, if you don't have the balance sheet or your cost structure is too high, you're losing ground with every single ounce you sell, but you're forced to sell to pay the bills and
mm,
keep the lights on. And if that market stays in those levels long enough, you've run out of material to sell with nothing to show for it.
mm,
Right. And we had that beautiful flexibility, and we actually decided to hold on to the metal because of that situation. But to give you an example of that, levered instrument, the company that bought us, Core Mining, is a company that had lower margins at the time. So say your price of silver is $30
mhm.
and your operating costs are $25. You've got $5 a margin,
Yeah.
right, per ounce. Well, here we are, silver goes to 100. Right? Your margins just went up, I don't know, 30 times, something like that, whatever that number ends up being, or 20 times. Right.
Mhm.
So imagine how that translates into your, quarterly performance, free cash flow yield. So if you're playing that quarter over quarter in the stock market, you can see how those numbers just go parabolic really, really quickly. So these companies can get cheaper by the day while the stock's going up hand over
Mm,
fist. Right.
right.
So that's where they are. But again, you're you're definitely representing gold and silver, but you're definitely got a whole lot of other factors that are contributing to the performance.
Sure. And how do you look at the different types of precious metals as far as stores of value? Gold is the one that most people focus on. We've touched a little bit on silver. There's also platinum. There's, a number of other materials that you mentioned earlier. I guess, how do you look at each of those, and do you think it's a good idea to have a diversified portfolio of precious metals, or should you really be saying, all right, gold is the sort of flagship option, so therefore it's the safest option, just focus on that?
Yeah, I try to take the basics, like my overarching view on my portfolio. And anytime someone gets, wants to go to sleep really early, ask me about it. Um, is I look at real return versus nominal return. So to me, the concept of replacement cost, right?
Mm,
If you sell anything, what is the cost to replace it? And that
mhm,
applies to everything you mine, copper, silver, gold, platinum, and palladium. So when you have platinum, palladium that are big in catalytic converters, for example, or copper, which is enormous for electrification. Silver is one of the best conductors out there. So you can have things like solar power, this AI build out. There's certain things you can take a backdrop on a theme where
mm,
power is obviously massive. So you can sort of say, I think this particular commodity is going to be a lot more in demand, for the next
mhm,
10 years. And that plays out. But you can't really buy copper, right, to store it. So I think a lot of these commodities in what's how do you actually hold on to them? How do you store them? And for most investors, when they ask, should I buy gold and silver? A part of me is asking, what's your timeline? What are you trying to achieve with that? So to
mm,
me, I love anything right now that's usually in the ground, because right now I think we're having this giant strategic battle, East and West, to start to appreciate that these things are not only required to run our economies, they're great alternatives to fiat currency, but for the first time in a long time, they're now strategically important. Right, this
mm,
duplication of supply chains, this tug of war east to west, and the West just had a 15-year cycle where we vilified all resources for many reasons. And we said, we're going to shun or, shame anyone who invests in commodities. And now we're realizing that, hey, we actually use them every day and we need them. So I think it's a combination of how and why you want to hold them,
Mm.
and then what that backdrop is. But gold is central banks buy that. That's been around for, hundreds or thousands of years. That one is the main one I would suggest for people. And then the other ones require a better understanding of the demand for the actual metal itself.
Oh, very interesting. Okay, so they're a bit more thematic almost as far as why you would hold them. And so just playing that back, I mean, it's a huge talking point nowadays that electrification, whether it's because of EVs and robotics, or it's because of other renewable energies coming into the market, or it's because of the data center requirements, or it's because of the global fragmentation. There's so many reasons why, energy grids will either become onshored, so therefore there'll be a bunch of extra build out, or they need to just increase capacity to supply these new technologies. Copper could be a way to play that specifically as an example.
I have one copper company that's the biggest name in my portfolio, and it's got a 50-year mine life potentially. So all the
Wow.
capital's behind it, and I hate capital spending. So you're producing for a very long period of time. So hopefully you're getting that appreciation in the copper price without having that giant phase of risk that we talked about. I think there's a stat out there saying in the next 15 years, to meet all of the needs that we talk about with data centers, electrification, any sort of climate related goals we have, we need to mine the same amount of copper that we've mined in the last 10,000 years combined. And the thing with mining, there really aren't any shortcuts as of yet. You get these small incremental improvements, but takes time. You got to permit these things. You got to find them. You got to raise money. You got to build it. Like, you really can't cut corners. And so when you have, big, long periods of time where there's no investment, price starts to move, overcome any barriers about investing, which we're now seemingly overcoming. You can't flip the switch on new supply, right? And that's where we're hitting this interesting back tailwind, I think, in my view, is, if you can find some names that are good balance sheets, long mine lives, you can get a lower risk exposure to some of these things you want, or you can go to the casino and, play some different early stage exploration companies in crazy countries and take on that
Yeah.
sort of risk. So that's what I mean. There's a whole spectrum of opportunities there. But I would say copper is probably one of the most obvious demand stories right now that, is another tailwind. And I would consider copper a precious metal, but I would say it's definitely a store of value. And I definitely think countries will start stockpiling these key materials, right? So again,
Right.
if I can hold fiat currency as a central bank, why wouldn't I start to stockpile raw materials that I have a strong view are going to go higher with time, when I also know that the paper currencies I'm holding have a good chance of going down with time? So I think
Right.
the type of instruments on central bank balance sheets will start to expand, and China already does that stockpiling.
Very interesting. And so if you want to invest directly into a metal rather than into a mining company, what is the best avenue to do that? Is that literally buying physical gold or silver, or is it buying an ETF or some kind of other instrument that's, maybe more liquid in the sense that it's on a stock market? What's your perspective on what's the best way to invest in an actual precious metal?
Yeah. Yeah. And again, there's a spectrum of ways to do it.
Sure.
And the first thing I would say is kind of like, what's your typical time horizon, and what are you trying to achieve? If you're trying to speculate and you're going to be in and out for 3 months, 6 months, and the like, sure, play the GLD, which is just an ETF of the physical metal. If you move along that spectrum, people will say, well, I want to know that wherever I buy my paper gold, whoever's storing it for me, that ounce is mine. And quite often in the past and currently, there's situations where there's multiple owners of that same ounce of gold. So if the people actually storing your gold, have any financial problems or go under, now you might not own it. You might not be able to get ownership of that metal. So people then say, well, the only true way to own gold is to physically own it yourself, right? It gets a little cumbersome putting it under your mattress and the like. But that also speaks to, I think, some of the dynamics you saw in Bitcoin versus gold, where in the early days of Bitcoin, you had so much speculation that I would argue people weren't really buying it for a store of value. There was a lot of speculation, a lot of purchasing crypto on leverage. Whereas
Yeah.
the people who truly bought gold, put it in a storage vault, that stuff's not going anywhere. That's really sticky purchases, right?
Yeah.
And I
Yeah.
think when you see central bank buying and the like, so I would say for your listeners, figuring out how serious they are and how long term they are about it. I own physical gold. I have physical silver. But I also have a few mining companies because I like to think I know the industry fairly well. I own a little bit in, that GLD ETF. I think Tether is another great instrument that's just sort of getting on the radar for a lot of people. And I think that's a fantastic one people should consider. So again, I
What is
think it
Tether?
depends. It's the stable coin. So, I mean, like I like to
Oh,
use the
okay. Yeah. Yeah.
example, if I was living in Iran or Turkey and these countries that are having like 50% inflation per year,
Yep.
that you can quickly sell that currency, and I can buy an ounce of gold held for me by someone else because I'm desperately trying to get out of this paper currency I'm being given every day and my paycheck.
Sure. Sure. Got it.
So I think global demand can pick up. They store it for you, they take care of it for you, they can ship it to you, and the like. So I think these are these instruments where they hold it as a one-to-one basis, so it's your metal, right? And so you can know that. So I think that's a growing need of people to say, I desperately need to have something other than the paper I'm holding, right? So I would say it's a
Right.
combo, but I would just definitely want to say to people, if they truly want gold, buying gold and silver companies that's a different proposition altogether.
Got it. And if you bought physical gold, this may be a stupid question, but is there places that you can store that? Like, do you go and store it in like a bank safety deposit box, or are people hiding it in their backyard? And I appreciate probably both are happening, but what is the average person supposed to do if they get a gold piece
These
of
are some
physical
of the
gold?
challenges. Yeah, these are some of the challenges, and that's why, again, depends on your time horizon, right? So right now, for example, silver, that other than Friday, we had a crazy move, but I think it's about $80 today. It was over 110 or something like that. If you were to go to sell your silver when silver is at 110, some of the stories I was hearing, the buyers are limited at these dedicated bullion stores. So sometimes the discount that they will buy it from you is $10, things like that.
Yeah, yeah.
Or buying it sometimes, if, when the prices usually go low, someone's got to package it, ship it off, then there's, all those costs. So the frictional costs in many cases are reasonable. And
Hmm.
sometimes they're just not, because that physical market is kind of liquid. So the market is developing. There's people trying to create products where they will store it for you. It's a big liquid market. You're going to have pretty healthy price discovery. That owner has to have that faith in that storage business effectively. So there are places, most of the bullion shops, and this is where SilverCrest actually had wanted to go, was to own someone who did the distributing and selling of gold and silver. So we could produce it,
Hmm.
ideally refine it, and then, Luke, you wanted to buy an ounce? Great. We could sell it to you or dividend it out to you as a shareholder. So that
Oh,
vertical
wow.
integration hasn't really happened yet, but all
Yeah.
those pieces exist. Yeah, we got bought before we could go there, but I would say, yeah, like it's a balance. I mean, in some people in some countries, how do you cross the border with more than $10,000 of gold if you wanted to, right? So
Hmm.
these are the things. Do you have storage vaults in different countries at different times? So if you ever had to flee your country, you could, get your gold after you cross the border. So again, it
Hmm.
depends on where you're living. But if I was
Yeah.
living in some of these crazy places in the world, I would be doing my best to, have it stored somewhere else. And I could pick it up when I arrived. And I think that's also why Bitcoin uh, has had such good traction for people in emerging markets, or markets where the currencies are really poor.
Yeah. No, very fair. So I'm just watching our time. I got time for one more question here, and I'm going to put you on the spot. It's a little bit of an unfair question, but using your crystal ball and your years of experience, There's been a pretty meaningful correction in the last week, especially with silver, but gold has come down as well. And, that was predicated by an unbelievable year of return on both of those markets. Is this a, market getting too overheated? Don't want to call it a bubble, but, the last year seems pretty unprecedented as far as how much value was created in those two precious metals in the last year. Do you think there's a risk now of there being, stagnation for a time period as value catches up, or do you think this is a macro trend because people are looking for something outside of USD that, there's maybe it's not as crazy as the last year, but there's still further upside, in the next few years?
Yeah, there's 167 currencies in the world, and the top 8 or 10 of them have an average of new supply growth of 10% a year. And the other 158 or so currencies, they have over 30% new supply growth of their paper currency per year. So I start with the fact that I don't think any of these paper currencies are stores of value. I think you lose money every time you store your wealth in paper currencies because the governments have no choice but to print more. So I just think people are waking up to this particular risk. There's a lot of complacency of not appreciating the risk of holding paper currency. So that in combination with the gold market is really under-owned. So I'm not advocating anyone go out and put all your money in gold and silver. But if you were to see everybody holding 5 or 10% of their net worth in gold and silver or copper or other hard assets that sort of protected you from that debasement trade, there really is a crazy upside for gold. But again, I usually start with that conversation to say there is crazy downside to, casually owning cash, right? And sitting on it. So yeah, if your time horizon is 20, 30 years and you're going to put a few ounces of gold, in your 1-year-old's stocking for Christmas, no problem whatsoever. If you're trying to, trade the next 6, 12 months, don't ask me. Right. But do I believe it should be a fundamental part of everyone's portfolio or real return being a fundamental part of everyone's thinking? Absolutely.
Yeah. No, well said. All right, sir. Well, I really appreciate your time. Thank you so much. This is highly educational, and all the best to you and your new baby.
Thanks so much. Appreciate it.
Thank you so much for watching. This is Beyond the Family Business Podcast. Please like and subscribe. All right, take care.